Hi traders, welcome to the channel, the Trading Mindset Mentor. We are live trading in gold today. So we traded live in the New York session. London session right now, and we had a small negative week while the previous London session gave us a 10% increase in our capital. Okay, so let's see what is going to happen in the today's New York session, which is going to start in exactly next 3 minutes. So all the people who are joining, you're most welcome to join our live trading sessions on the channel Trading Mindset Mentor. Please do subscribe to the channel and hit the like icon, guys. And if you have any queries, you can put it in the comment section. So let's go for the fundamental analysis first. Let's look at the news. Today, high probability or high volatility is expected because the FOMC meeting minutes are going to be released in the market. And that's what you have to remember, guys. This is one of the very important news of the whole month or even a quarter where you are going to find some good volatility in today in the gold and the other forex currencies as well. Okay, so today fundamentally, New York can be highly volatile. It can be highly panicking, as you can see in the pre-New York session. So London session was highly consolidating, in which we traded and didn't lose any good money. We were at the recently at the break even itself with a minus 1% of the total capital because of the swing trades itself. But however, as you will see, as soon as the 5:30 p.m. the pre-New York session started in the market, you can see that there was a huge volatility towards the upside, and price actually took out the Asian high and Asian low, Asian high and the previous day high as well. So this was the previous day high. If I'll mark over here, this is the previous day high, which the price actually created over here, and the price took out all the liquidity towards the upside in a single, you can say, candles itself in a single momentum. Even not just the previous day high. If you look at the previous 2 to 3 days highs, you will see that the price has taken out the major liquidity from the upsides. So now today in the New York session, what will happen? How are we going to take the trade and how we are going to make the bias? So we are going to watch that all. So as per the rules, we are going to take 5 trades with 1% risk per trade. And accordingly, we are going to make some money or have a small break-even day. So let's see what happens, because today is high volatility expected in the market. So we can expect some good pips that we can collect for today. So 7 p.m. is about to happen. New York markets are about to start. We are done with our complete analysis of the fundamental. Let's look at the technical analysis. This is the last breakout structure that the market has happened. And post that, what you can see is that the price is creating a consolidations level. So this is the another breakout structure. If the price goes above this level, this is a pure, you can say, continuation. So what is happening over here is, as soon as you can see that in the pre-New York session market itself, what did happen? The price created an uptrend with a deeper pullbacks over upside. So what is happening right now is that the price is either in the accumulation phase or the distribution phase. So look at this. When the price is consolidating within an area, what we are expecting is, if this is accumulation, we can expect the price to move towards the upside. And if this is a small distribution, we will expect the price to go towards the downside. So this is the today's bias. And once the price will start movement, giving us any kind of momentum, only then we will start deciding what to do with the trades itself. So let's see right now what is happening. As I told you, the price created a above side liquidity. Price took out the previous internal liquidity, and now the 7 p.m. candle is there. So New York markets has started. Let's see how the first candle behaves over here. Does it do the breakout structure, or it gives us another entry? Because right now the price is still retracing towards the downside, but has not given any bullish entry. So let's say post this candle, if we get any bullish entry, we will be trying to target this level, and accordingly we are going to decide the buying trade itself. So right now we are planning for a continuation trade, since the market is creating a series of high highs and high lows and is continuing the direction towards the upside. I'm expecting the continuation itself. So if the market takes out much more liquidity from the downside, take a deeper pullback and gives us a buy entry, only then we are looking for something solid for buying itself. So right now, as I told you, the price is consolidating. So we are waiting for the price to take out some liquidity, and only then we are going to buy or sell. So price is trying to move towards the upside. Let's plan the first buy. If the price doesn't take out the external liquidity of the above, we can plan a small buy trade itself, or 1:1. If that price takes out the external liquidity, then we are not going to buy. So let's see in the single candle itself, as we can see that the price took out the external liquidity. Now we are not looking for buying. We are looking for one more retracement, and then only we will be buying towards the upside or downside. So let's see what will happen for today. So this is the change of character. That means if the price goes downside, so what will happen is that the price took a deeper pullback, created a new breakout structure, created a new higher high. If the price goes down below this level, then we are looking for another change of character. So since price is again backing up towards the upside, as I told you, we are waiting for a good retracement towards the downside. We are expecting the price to create a sell leg, and only then we are looking for a buy entry. So price is over here trying to take a deeper pullback, as well as it's trying to target the external liquidity over here. Hi everyone, those who are joining. So price has finally taken out the external liquidity, which we were expecting that the price might try to take out the external liquidity towards the downside. So now what are we expecting from here is that this is a kind of a manipulation that we can see over here. The price is has to try to take out all the stop losses from the downside, right? So now what are we looking at here for that? If we get any reversal trade towards the upside, because we are expecting that the price now will try to target the upside levels. So high probability says that the price should continue towards the upside, and low probability says that the price will try to continue downside only. So with a big panic momentum, as you can see, the price was expected to create a good sell leg in the market, which is now happening, and the price is taking a deeper pullback. So over here, if you look, the price is already in a continuous to upside direction, and it is nothing just a deeper pullback towards the downside. So from here, we can expect that the market is still towards the bullish. So let's see, guys. We can plan a buy entry from here. If the price creates a bullish order block, then we can plan a buying entry and we can target towards the upside. The candles are getting bigger and bigger these days. So that's you have to remember that the minimum stop losses are for $10 for now. So if the price creates a bullish order block, then we are looking for a buying entry. Okay, we have punched our first order, guys. Out of the 5 trades, the first order is already been executed over here. Now we'll be targeting towards the upside because we are expecting that this is a kind of a manipulation that the price has done. After taking out all the sell side stop losses, we are expecting that the price might try to U-turn towards the upside. Okay, so this is a manipulation trade. Once the price took out all the, you can say, sell side liquidity, now we are expecting that the price to retrace towards the upside and taking out the buy side liquidity. Let's see. High probability says that it should take out the upside stop losses. The early sellers that have actually started selling from the, you can say this first breakout, all of the sellers have put the stop losses on these highs. And if the price moves towards the upside, it will take out all the stop losses of the sellers because this is a continuous buying momentum. And low probability says that now the price will try to continue towards the downside and will try to change the momentum of the price. So then we will be looking for the selling opportunities rather than buying. So let's fill in the journal. First trade is the chalk, the buying. Let's see what will happen with the result. We are also filling up the journal side by side so that you can understand how professional traders are trading on a regular basis. So as we can see that the price is trying to move towards the upside. So our logic is actually good. However, what we are looking for it that after the entry, does these buyers, the buyers who have come from this level, do they have that much power if they can take out the stop losses of these levels? This is the major expectation today, or this is the major question for us today. That if that can thing can happen or not. Let's see if the price gives us a target or tries to retrace back down. This is a small risk reward trade, guys. So high probability that we can be right since the price manipulated all the sell side stop losses, and that's why we started buying towards the upside. I'm not expecting much better volatility out of here. I'm just expecting the sell side stop losses to be taken out. The early sellers in the market who have started selling, looking at this lower low and the lower, you can say double top pattern and the breaking of the neckline. I'm just expecting if the price will try to manipulate this or the price will try to move towards the downside. So let's say if the price hits a stop loss, then we are looking for selling section only and not for buying. But if the price over here, what happens is if the price continues towards the upside, takes out the sell side liquidity, then we'll be looking for buying itself. Let's see if it's the target or not. Price has gone to the 90% order block towards the upside. It will be a 1.5% or 1.4% target over here. Let's see how it behaves. Does it really go upside or it goes towards around towards the downside again? High probability, as I told you, is that the price should go towards the upside, take the stop losses of all the early sellers in the market, and the stop losses of the early sellers are above this liquidity, and that's why we are targeting it. Many people are saying target, so maybe in other brokers, the price has already given the target towards the upside. Prices can be different for different brokers, guys. So if you're using a different broker, there might be happening that you can get the target or not. Okay, so somebody was saying that I booked at 1:1, his patience were off. That also happens if you're a conservative trader and you think that the price might not give you anything. It's good to take 1:1 as well because the price did travel to 1:1 and then try to come back. But my style of trading is liquidity till liquidity. So I have a different kind of style of trading. If you want, you can choose your own style and exits. Let's see, the price is trying to drown towards downside again. If the price comes back and takes out this liquidity, then we'll be shifting our stop loss to break even then. Because price is consolidating within the range, that means it can be an accumulation as well as a distribution. So it looked like an accumulation while the price went up and then again went towards the downside. So if this liquidity is hunted, then we'll be doing the break even itself. Also, this will be the nearly boss. This will be the new breaker structure towards the downside. If the price crosses this level, then we are expecting the price to go towards the downside only. Price is again testing a stop loss area. Hang tight with your stop losses and targets. As I told you, we are taking only 5 trades. That means 1% per trade. So even if we lose all the trades, we are maximized minus 5% of the total capital. And if the price goes up and in our function or in our ratio, then the highest targets that we have achieved till now is 10. And the highest target in the backtesting was 25. So both can happen. The range of the, you can say the results for any day is between -5 and 25. So we have to shorten our targets now. This is the internal chalk that the price has created. And now we can look for another buying. And we'll be targeting towards the upmost side. So we are planning for another buy if the price gives us a good liquidity towards the upside. Let's see. And the target will remain over here. If the price gives us any other bullish order block, then we are looking for again buying. So price is testing in the stop loss area while we can actually manufacture one more entry. If the price goes below this level, then we are looking for selling trades and not for buying. But there's a high expectation as well that the price can take out the upside liquidity again. Price is still trying to sustain the support that the price actually created below these levels. Let's plan the major entry from now. Let's see if we get any other bullish order block and then we get the entry. Price is again trying to sustain the support. That's what I was trying to tell you. Also, the original target of the previous entry has been confirmed to this level, because above this level, the price might try to go back downside. The price has confirmed the support. I have put up the next entry over here. The high of this candle is 789. So we will be putting 7.8. Let's see if we get another entry, and the target for this entry will be 5.59 R. If the price goes up, then we'll cancel this entry. Obviously, the target of the previous trade will be taken care of, and we'll be planning for next entry itself. If the price goes down suddenly, then there will be two stop losses that you are going to get. However, if the price actually goes in a favorable direction, then 1.5 R over here and 6 R over here, we are going to get 7.5% return, which is a good, I believe, as a very good risk reward if you ask me. Against that, all the risks are measurable. Since we are using proper risk management, only 1% a trade. That's why even if we lose a very small amount. But whenever we are winning very big. Price is highly consolidating, guys. Please wait for your entries. Don't rush into the market with multiple entries. Price is near to the first target, the target of the first trade. Let's see if we get the target first or the price goes down and gives us a second entry. As soon as the price gives us this target, please try to remove this entry, the second entry that we have put. So without giving the target, the price is again coming towards the downside. High level of consolidation is going on, guys. So be prepared, and having a proper risk management is highly compulsory in this type of market. As soon as the New York started, we can see that the price is actually moving in a range. Let's see, guys, if this time the target gets hit or not. or otherwise it takes some one more U-turn. Okay, so first target is done, guys. My internet is a little bit slow, that's why it's not showing the candles. Mm, If I'll refresh it, there is a high possibility. Okay, so as we can see that the candles are done. Okay, so we will be putting the entry later on. So now from here, we have to look for a selling trade. So we will be crossing this buying trade now because the price is taken out the upside liquidity. Now we are looking for a selling trade. So first trade was executed and the full profit has been done for 1 is to 1.2. I think this is 1.25 RR. Okay. So let's see if we get a selling trade from these levels. So till the time the price is not taking out the upside liquidity, I'm looking for a selling trade itself. If the price takes out the external liquidity, then we are looking for a buying trade. So price has taken out the upside liquidity. Now we are not looking for selling, guys. We are looking for a buying trade. The price told us that yes, it wants to continue towards the upside. Second trade, we tried to take a good RR trade, but the price never came back over here. So first trade of the New York session out of the 5 trades was is profitable for today. Now we are waiting for what? We are waiting that the price wants to continue. So here the price showed us that it wants to continue towards the upside. And the first manipulation trade was done right. Okay, now what we are expecting is the price to take a deeper pullback again and then try to move towards the upside. So this will be a continuation trade for today. So this is the first liquidity we expect the price to take out internally. Only then we can expect the price to take out external liquidity. So I'm filling the trading journal over here with you guys. This is 500 and this is 500. So we are using the capital of $500, and on that same capital, we are trying to take and make it more exponentially grow up. So my first entry, as we can see that the price is actually flying towards the upside, and that's what higher expectation was, that after taking out this manipulation trade in the market, we expected the price to go towards the upside, and that the same thing happened over here. So yes, first trade, if anywhere ask you that if this isn't consolidation, you can get such a trade, this is highly impractical. I'm telling you guys, you need to have a lot of learning, not a lot of concepts if you want to have some good type of earnings in the market. So price has created an internal liquidity over here. So let's see what will happen. So price is continuously trying to go towards the upside. It is creating a series of higher highs and higher lows. What we are waiting for is a deeper pullback. Okay, we do not trade on smaller pullbacks. We try to take a trades on deeper pullback. Only then we are looking for a buying opportunity. So high probability says that the price wants to continue towards the upside, and this huge momentum towards the upside would like to be continued for now. So we are looking for a continuation trade for now. Price is claiming new higher highs right now up to the level of 4,500. The major psychological level is the 4,500 level from where we can see some sort of retracement towards the major retracement towards the downside. So if the price continues today and wants to go towards the upside without giving any pullbacks, the major target should be 4,500 level. So the traders who are actually taking long risk rewards, try to understand you can actually target till 4,500 level over here. This is the major psychological level because there is no nearest liquidity. If you look over here in the previous 2 to 3 days or previous week itself, there is no nearest liquidity. All the liquidity have been taken over by the market itself. So there is no liquidity in the previous 10 to 15 days over here. So when there is no actual liquidity nearby the highest point or the highest resistance from where we are expecting the market to retrace towards the downside are the major psychological levels. So nearest to the price 4480, the psychological level is 4,500. And that's where we can expect the major downturn or the shift will happen in the market again. So let's see, the sellers have started kicking in the market. If they try to take the first internal equity, then we can expect a small buying towards the upside. So price has finally taken out the internal liquidity. So this is the new breaker structure that the price has created now. So now we'll be looking for a buying entry. Let's see if the price can deeply retrace towards the downside. That will be a good risk reward. But otherwise, if you look over here, the price has started going towards the upside. So price took out the internal liquidity from where we expecting that the price should now take the external liquidity towards the upside. If the price takes out the external liquidity directly, we are not going to put up this trade then. If in the single candle, the price takes out the external liquidity, that's where and when we are not going to take the trade. Only if the price confirms and stays below this level. if the price confirms the entry before taking out the external liquidity. So price is confirmed. I have put up the limit order over here and the target will remain over here. So price has given us the entry. Now let's wait for the target. This is a small risk reward trade. As the price continued towards the upside, low probability says that the price will go down directly and high probability says it will go up. Small risk reward trade, guys. Price traded a very small swing. That's why we have to take this trade. Let's put this 1:1. So I've targeted for 1:1 in this trade. High probability says it should go up and low probability says it should go down. Let's target the liquidity first. Second target done. I know this was a small risk reward because the price didn't have much space to go above side. That's why I took it. Now we will wait for the price to give us a good retracement towards the downside. 0.77. We didn't make much good money in it, but however, money is money. This was a profitable trade. Now this is the new chalk. Let's see how the price behaves in the future. Everybody is saying thanks for the 2 profits. Great, guys. I know the risk rewards are small. It's not but it's not an unhealthy reward. It's a healthy reward still because price is creating good big candles. And however, we are able to catch this small part of the move. That's also some victory. So total we have accumulated around 0.77, 1.23, 2R, 2R we have already calculated, 2R, that means 2% of the capital we have already exceeded. And if you look over targets, my target around my capital is around more than 3% now. Because this was a big stop loss, I had to take a big size of the candles. And that is why if you look over here, I received 15 somewhere over here, $12 over here, $3 over here. So total $15, which is 3% of my total capital. So now let's see what we will get. Either the price will be moving towards the downside or upside. As I told you, the psychological level is 4,500 from where we can expect a good sharp pullback towards the downside. So now we're expecting a good pullback again, and only then we are looking for a continuation entry. Price is flying up again. So let's see if the price takes out the internal liquidity and give us one more entry. Let's see if the price takes out the internal liquidity or not. So finally, price has taken one more internal liquidity. So this will be now regarded as a new breakout structure. We get a deeper pullback, we will get good risk rewards. If we don't get it, then we will have small risk rewards. Again, a small RR trade if we get the entry from these levels. If the price directly breaks upside, then we are not looking for buying. We will be looking for a small retracement towards the downside. We'll be looking for selling. But if we get the entry through this bullish order block, then we will have to buy. If the price takes out the external, don't put the trade. Didn't took out the external liquidity. We have punched the trade. Let's see if we get the entry and then the target. The target will remain over here. Again, a small risk reward trade. Because the price is very panicking, and feel lucky if you're getting the entries. Yesterday, if you remember, we didn't get any entry in the New York, and we are positive in the New York today. Already made +2R in the total sessions. So let's see how the price behaves now. The price is about to take out the external liquidity. If the price takes out the external liquidity and closes the candle, then don't cancel this order. Wait for the candle to close. Okay, now cancel the order. Now we're not looking for buying, we're looking for a small selling opportunity. If the bearish order block confirms, then we're going to have a sell and we'll be targeting this level. If price already takes out the internal liquidity, then don't sell. Still trying to move upside. No selling entry confirmed till yet. Okay, so entry is confirmed, but however, the price didn't take my entry. So we are selling. Right now, we are sold and we are going to put the stop loss over here and the target over here. My limit order was not executed. That's why I have to modify the position. Let's see. Price is consolidating, guys. It is testing a stop loss area. So obviously it's a probability that the stop loss can get hit or the target will get. So now we have to short the target area to this level because this is the new iChalks. If the price takes out this liquidity, then we are again looking for buying. The price has commanded us today that we are going to get small risk rewards for today because either the market is panicking or it is giving very small risk rewards. Let's see how the price behaves. Price took out a stop loss. So third trade was stop loss, guys. First two trades were profitable and third trade is stop loss. I'm still positive with 1 hour. Let's see how the market is going to behave. We expected a good retracement towards the downside, but however, that didn't happen. Now we again have to look for a continuation trade itself. If this liquidity wins out, then we are looking for a continuation trade towards upside. Price is flying towards upside again. So it didn't give us the entry over here and then started flying towards the upside and it's crossing the level of 4,500. As I told you, it's a psychological level from where there is expectation that the price might to try to take a deeper retracement than usual. Let's see, guys, if we get a good retracement back to this inducement, then we will be again taking a buy trade towards the upside. This will be a good risk reward trade. The retracement is deeper than expected. So price has taken out the retracement now, and this is the new breaker structure. Let the candle close and then we'll be planning our entry. If the price takes out this external liquidity, again, then we'll be looking for buying itself. So price finally took out the external liquidity from the downside without taking out the psychological level of 4,500. Price is taking a deeper pullback in panic, and that's what we expected the market to do. Let's see. The market is about to confirm the bullish order flow from here. There's a high possibility that it can go in panic as well. There's a lot of liquidity above side. I punched the order. Let's see if we get the entry or the price directly goes towards upside. Price is trying to make a higher high. However, the price has not given us any entry till yet. It's panicking up again towards the downside, upside, I mean, but hasn't shown any kind of entry from our levels. Price is flushing upside without giving us the entry. So now we'll cancel the buying order since the price retraced already the 50%. We'll be looking for a good selling entry rather than buying. The price retraced till the equilibrium. Let's see if we can take a sell and target the downside market only. The price hits a bearish order block, then we are looking for selling and not for buying. Price is still moving and clutching, or you can say rising towards the upside only, not giving any sellers any hope. Deeper the retracement, better the pullback or the break of structure towards the downside. Price is flushing down. And creating now a wick candle. Let's see how this candle closes. So we have punched our fourth order. Let's see if we get the entry or price panics towards the downside. It's trying to move up. Let's see if we can get the entry or not. Price panic towards the downside without giving the entry. If it takes out the external liquidity, then don't cancel the trade. High level of consolidation going on when the price doesn't give the entries, directly creates the panics. Let's see, guys. Price is near to the entry area. If we can get any entry. I think the price is about to take one more U-turn. So let's plan for another entry as well. If we can get one more entry towards the downside. The price confirms a bearish order block on the downside, then we will be taking the downside entry rather than the original entry. Original entry will be cancelled then. Let's see how the price behaves. Price is not going exactly to the original entry. That's why we're planning another entry from this level. Okay, so we have punched this order and we are going to cancel this original entry over here. So I've cancelled the original entry and now we will be trying to take the trade till over here. So this entry we never got executed. So now this is the next entry. The target will be lesser than expected. For example, 1.5 for this one. Let's see if the price gives us the order or not. One more small trade. Price is panicking and not giving the targets. If you will look over here, price created this liquidity and then didn't get the entry again to the limit order and finally went to the target again. So now even if the entry comes, we are going to have a bigger target than this. So the next target will remain over here. If we get the entry in this candle, then the next target will remain over here. If the price directly takes out the external structure, then we are not putting any entries anymore. Let's see if the price gives the entry or directly goes to the external target. If the price directly goes to the external target, then we are looking for selling again. Okay, guys, the major trade is executed and the target is 2.68 hour. Let's see what will happen, whether the price will now go towards the downside or high probability says it should go down. Low probability says it should go up. So fourth trade is also stop loss. The price took out the stop loss from this entry and it started moving towards the upside again. So it's highly consolidating, and that's why we cannot say anything. So first trade was target, second trade was target, third trade is small stop loss, fourth trade also small stop loss. So let's write it over here. -1. I believe we have lost a very small amount over here, around $4, 4.82. We are still at break even now. So either the next trade will be a profitable trade and the whole day will be profitable, or it will be a small stop loss and then we will be at the break even again. So price took the stop loss and then continued towards the downside again. So finally, the price after taking out the stop losses has started delivering itself to the downside market. So now let's see if the price is able to go towards this level. But there's a high consolidation going on after the post. The market has moved towards the upside in a so long way. Now the consolidation is happening. So finally, price went downside. We had a good entry over here. However, the price, because it was consolidating, it manipulated and then went towards the downside. So this is a part and parcel of life, guys. These stop losses are the ones because of which you are able to understand that why you need to keep your risk under control. These are the exact reasons. So now let's look for another manipulation towards the upside, and then we'll be looking for selling again. So now let's see if the price can give us one more consolidation towards the upside, and then we'll be looking for selling. So price is again trying to move towards the downside. If the price continues upside and takes out this momentum, then we are looking for selling again. So price again try to move upside and taking out the upside liquidity. And this is again new what? Natural BODS. Let's plan for a small entry towards the downside. Small RR. It's 401. Let's wait for a deeper pullback towards the upside only. Then we can expect that the market will try to go towards the downside. We will get a better RR than this. So let's see if the price gives us any bearish order block. Then we are looking for selling again. Price is still moving upside. That's nice. Okay, we have last punched the last order. Let's see if we get the entry or the price and the panic momentum goes towards the downside. If it now exceeds this liquidity, then we are looking for a downside momentum, upside momentum actually. So price has executed the order. Last entry has been done, guys. Post that, we will stop trading. So this is 1.124 RR risk. Let's see if the price gives us the target or the stop loss. High probability says that the price should go down after a lot of consolidation and this manipulation. We expect the price to go down. However, if the price is going to consolidate more, there is a possibility that the price can go up and take out this liquidity. So that's why risk management is highly important. Price is in a stop loss area, guys. Price is highly manipulating. That's why our last sell entry also got manipulated and then went downside. So have proper risk management for such kind of situations. So this is the last trade for today, guys. Either this will give us a good 1% up for today, or it will be minus 1% for today. They're already at break even zero. The first trade was profitable. The second trade was profitable. The third trade was stop loss. Fourth trade was stop loss. If you look at trading journal, it is still exactly at the break even itself. So this trade is going to decide whether we are going to have a minus 1% day or a plus 1% day. If you can see the stop loss still intact, high probability stop loss will be taken out. Let's see. So last stop loss also taken out by the price itself. Today we are standing at minus 1%. Let's look at this, minus 601. So this was boss continuation trade. And if you look, the result for today is exactly minus 1% in the New York. Okay, minus 2%, 3% in the, I think minus 2% was there in the London session, minus 1% in the New York session. Yesterday, we had a good day. We made 10% positive. Then it was a break-even day, again minus 2% and minus 1%. So we are 7% positive for now. Let's see what will happen in tomorrow's London session. We'll be trading in the London session tomorrow, and that will give us a good command over the price. Let's see, because tomorrow there's a news. However, exactly at 11:30 p.m. today, there is a news in the FOMC, and I think I'll be doing live in the news trading itself. So if you're available at 11:30, do subscribe to the channel, The Trading Mindset Mentor. We will be live trading on the news itself. Okay, guys, we will be live trading on the news at 11:30. So let's see if I'll be available. I'll be coming in and joining in live at exactly, I think 11:25 p.m. or 11:20 p.m. Okay. And till then, hasta la vista. Take care. See you in the next video, guys. And do subscribe to the channel and hit the like icon.